Hello, I'm Cindy Jaramillo, and I'm with Bank of England Mortgage. I'm here to tell you a little bit about what I can do for you. I believe a mortgage should be about building relationships. I dedicate myself to communicating with my clients and partners and doing my job with pride and integrity. From application to closing, I'm with my clients every step of the way. This is not just a statement, but a strong commitment that I bring to every mortgage application I receive. Bank of England Mortgage is the only completely local lender with our processing, underwriting, and closing all in-house right here in Sarasota. This allows us to address any issues that may arise in a prompt manner. I am here to answer any financing questions you may have. I love to educate clients as well as my referral partners. I am the 2022 Treasurer for Women's Council of Realtors Sarasota and Vice President for NAREP, the National Association of Hispanic Real Estate Professionals. I am also very involved with RASM. I am serving on 2 committees this year. On a side note, I am originally from Queens, New York, and I'm also the mom of 3 beautiful kids. Please do not hesitate to reach out to me if you have any questions or if I can help you in any way.
Thank you very much, Cindy. And I'm Anita Lambert with Premier Sotheby's International Realty and also your Vice Chair at the Global Business Council. Our chair today, Pat Tan, could not make it, but we're very happy that you all could come, and we're going to be introducing our speakers here next. So, as Pat Tan aptly described, taxes, attorneys, and money, what could possibly go wrong? So yes, these words can strike fear into our hearts, but hopefully we're going to get prepared enough today after hearing all the updates on the laws and taxes on how we can help our transactions flow smoothly and efficiently. So our expert panelists today are Renea Glendinning, right here in the middle. Would you like to welcome her? As well as Gary Kauffman, Kauffman Law Office, and Eva Slavtcheva of Money Corp. So first of all, let me tell you a little bit about Renea Glendinning. Renea is a shareholder in the International Consulting and Tax Planning segment for her firm, Kerkering, Barberio and Company. Her primary practice areas include individual and business tax consulting. She's authored many articles regarding various international tax issues and frequently gives presentations on U.S. income and estate taxation of foreign nationals doing business in the U.S. She joined Kerkering Barberio in 1987 and was admitted as a shareholder in 1997. She graduated from the University of South Florida with a BA in Business Administration and Master of Accountancy. Please help me welcome Renea Glendinning.
Did everybody get a handout?
Okay, great. Okay.
Thank you very much. I imagine that a number of you have heard me talk before, so thank you for coming back. I came to hear the other speakers. So we have 20 minutes, so I was told I could talk about any international topic, but the topic that I think most of you run into the most is obviously FIRPTA. Everybody know what FIRPTA is? Okay, so basically FIRPTA is the law, for the Foreign Investment and Real Property Tax Act. It's been in effect since 1980, so it's not new. What is new is some of the changes, but they're not that new. Back in 2016, the law changed from having a withholding of 10% and they raised it to 15%. So that was one of the changes. So basically, FIRPTA says that if you have a foreign seller of U.S. real estate, they are subject to a withholding of 15% of the sales price. They call it amount realized, but in most cases that is the contract price, the sales price. And so what happens is that 15% gets withheld at closing, and within 20 days after closing, that money by the closing agent is sent to the Internal Revenue Service. It goes along with forms that are IRS forms that identify the seller, and it allocates the withholding. If you have multiple sellers, the withholding is allocated among them. But it's a form similar to like a 1099 that you would get that says, okay, here's the name of the person, here's their tax ID number, we'll get into that a little bit later. here's how much withholding is being remitted on their behalf. They would then have to file their U.S. income tax return. I get people say, but I don't file a return in the U.S. And I say, but you will next year because you have something to report. So they report the sale. On the tax return, they calculate their profit. So this withholding is simply a deposit. I call it a security deposit. It's the money that the IRS says we want you to send in so that we feel confident that you'll at least file a tax return and pay whatever tax you owe under the law. 99.9% of the time, especially with the 15% withholding, the withholding is way, way more than the actual tax. So most of the time, the non-residents are getting a refund, okay? But they have to wait until the following year because, like all of us, we're on a calendar year for reporting purposes. So if the sale took place in 2022, you would report it on your 2022 tax return, which cannot be filed until 2023. So a lot of people get very upset, especially if they closed early in the year, when we tell them it's going to be at least a year before you can even ask for the IRS to send your refund back. But that's just the way it is. Now, some of you have been dealing with this for a while will probably say, but isn't there a way that they can apply to get their money back early? And yes, there is, okay? It's called an application for a withholding certificate. And by that method, you basically do a calculation of their profit based on the information available at the time. You don't always have all of the information at that time. You do a calculation of what their profit, you would do the calculation of what they call the maximum tax. So you would apply the highest tax rate to that profit, because the IRS says we want to keep enough to know that we'll have enough to cover the liability. So they actually take out more than the liability. So even if you've done that, they still get some refund back. But it's a way for them to get the majority of their refund back early. That was before, that's not now, okay? In the past, meaning pre-COVID, like everything else in life, pre-COVID, you could send this application to the IRS, and typically within about 90 days after it's submitted, the IRS would come back with a letter, we call it a withholding certificate, that says, yes, we approve your request for a lesser withholding, we approve X number of dollars. So this is after closing, of course, because it would take at least generally 90 days. So that 15% would be held in escrow by the closing agent. When we got the withholding certificate, we forwarded it to the closing agent. They would then have 20 days after the date on that letter to send in the reduced amount, and then they could send the balance of the withholding that's being held to the seller. So it was a great way, and we used to do a lot of those. We have done 2 this year, and that was only under very special circumstances, because the timeline for the IRS to approve these applications now is in excess of 1 year. So we have, I still have 18 applications submitted in 2021 that we still do not have approval. The oldest are from March of last year. So in essence, it doesn't get them an early refund. It actually delays them getting a refund, because if they apply for the reduction and next year we can't do their tax return until we get that, because we don't know how much withholding we get to claim on the tax return. So we've got 18 very, very unhappy people right now, and there's nothing you can do about it. There's totally nothing you can do. So even though that exists, we do not recommend it at this time until such time as processing times get back to normal, and I really don't see that happening anytime soon. So we still do get every now and then somebody asking about it, but we don't even bring it up anymore, because there's no point in saying, here it is, but you can't do it. So that's pretty much, okay. There are, as everything, there are exceptions to the 15% withholding. And obviously, because it's tax law, it's a little complicated. So the exceptions are, and they break it down depending on the sales price. Don't ask why, because I can't explain the logic, okay? But this has been in the law since '84. So it's been there for a long time. Obviously, somebody in Congress got their way back then. But the exception says if the sales price is $300,000 or less, and I get people saying, oh, if it's under 300, 300 still qualifies. So it's 300 or less. The sales price is 300 or less, which you don't see a whole lot of anymore, but you do some. And here's where you don't, here's where you don't ask. The buyer. If the buyer intends, and hear me out, I'll explain it later. The wording is if the buyer intends to use the property for their personal use for at least 50% of the time that the property is in use for the next 2 12-month periods, and they will sign an affidavit under penalties of perjury, that is their intention, then the seller is exempt from the withholding. So instead of having 15% withheld and sent to the IRS, they have 0 withheld. Now, I do want to stress, the 0 withholding does not exempt them from filing a tax return to report the transaction, and if they owe tax, it does not exempt them from paying tax on the gain. Okay. It's simply, you're not forced to send in 15% in advance to get back the following year. Okay. Yes, ma'am.
Can I ask a question?
Sure.
So if this happens, then is it on the onus of the buyer if the seller doesn't file a tax return? What happens then?
No, it's not on the onus of the buyer if the seller doesn't file a tax return. They have no control whether somebody, but what they are on the hook for is remitting the proper withholding. Okay, so if you've got a foreign seller, the IRS holds the buyer responsible for the proper handling of the withholding. So if the withholding goes in late, past the 20 days, or if the withholding doesn't go in at all and somehow the IRS gets wind that there was this transaction that withholding wasn't sent, there's a little few exceptions to that too. It is the buyer who's going to get the nasty letter from the IRS. Okay, so some buyers, even though they may fit the parameters of that exception, say, nope, I'm not signing it. You send in the 15%, I'm done with my obligation. Okay, yes.
Conversely, is the seller on the hook if the IRS finds out the buyer didn't use the property the way they
Okay.
Is the seller on the hook later if the buyer doesn't use the property as promised, i.e. 50% of the time total property is in use?
Well, if anybody would be on the hook, it'd be the buyer, not the seller. Okay, and theoretically, yes, but from a practical standpoint, that affidavit or lack thereof never goes to the IRS. Nobody at the IRS is going to follow up with that buyer 2 years later and say, well, did you really use this property? It just doesn't happen, but obviously a buyer should never sign a false affidavit. Because first of all, why would a buyer sign a false affidavit? It does nothing for the buyer, it's all for the benefit of the seller. So if there's any question as to whether they would meet that criteria, because remember, it's intention at the time of purchase. Nobody can say, this is what will happen for 2 years down the road. Nobody knows, circumstances change. But they can say, it was my intent at that time to use it. Okay. So let me explain exactly what that means, because there's a lot of misconceptions. People hear 50%, they think, oh, they have to live in it 6 months out of the year. No, that is not what it says. It says that the buyer intends to use the property for their personal use for at least 50% of the time it's in use. So the days that the property is vacant doesn't count as in use. So you're looking at total number of days during a 12-month period, the first 12-month period after purchase. Say, okay, do you intend to, basically we say, do you intend to rent it out? because otherwise it's pretty much personal use if you're not renting it, okay? So if you intend to rent it out for the season for, let's say, 3 months, but you intend to use it 4 months out of that 12-month period, you've met 50% because your end use is 7 months, it's not 12. So, so that's basically how you have to look at it. And it's for the 2 12-month periods. So you look at the first 12-month period to do the calculation, then you look at the second 12-month period. Because somebody could say, well, I plan to rent it out on the first year, but the second year I'm going to retire and move into and live in it. But you have to do it for each 12-month period. So it's not enough that for the second year you're going to not rent it out. So a similar exception applies when they increased the rate from 10 to 15, they put in another exception to the 15% withholding. The 300 and under exception has been in the law since the beginning. But then 2016, they added, it's the same criteria, the 50%, personal use. If the sales price is over 300, remember because the 300 and under qualifies for 0, over 300 up to and including 1 million, okay? Then if the buyer signs that same affidavit, then the withholding is 10% instead of 15. Okay. Now, some people say, oh, you apply for this reduced withholding. No, that's another process that we're not doing anymore. This is just an automatic reduction from 15 to 10 if the buyer signs the affidavit. Okay. So that's happening a lot, and most of the sales we're seeing are in that $300 to $1 million range. And if it's over $1 million, then don't even bother asking the buyer what they're doing because it's irrelevant, okay? Another, just, so I only have a few minutes. If the buyer is a trust, let's say somebody said, oh, I want to buy it in my grantor trust, okay? Even though for tax purposes that trust is what we call disregarded, it's still not an individual, okay? So in order for that exception to apply, the buyer must be an individual. It can't be an LLC, it can't be a corp, it can't be a trust, it can't be anything that's not an individual name. So if it's not an individual, don't ask them to sign the affidavit because they can't. It's not effective. So that's it in a nutshell for my 20 minutes, and I'm happy to take questions, or I guess we'll be having questions later.
Yeah, we can do questions.
Okay,
Yeah.
all right.
If one question, if the seller of the home, the owner is an LLC, what happened then?
Okay.
And it's an American LLC, but owns to, for example, to a German one.
Okay, so, all right, so the question is what happens if the seller is an LLC? Okay, so the question is that a foreign seller or is it not a foreign seller? Depends.
Depends.
It depends, okay, so an LLC, for tax purposes, an LLC can be taxed in a multitude of ways. If it's an LLC that only has one owner, it's referred to as a single member LLC, and unless it's done something else to make a different election, it's disregarded. Okay, so for tax purposes, it's as if that single member is the seller. So if that single member of that LLC is a foreign person, it could be a foreign corporation, it could be anything, okay? Then you look at what is the status of the single member. If it has more than one member, then for tax purposes, it's classified as a partnership, okay? So a partnership is a separate taxable entity, it's not disregarded. So in that particular case, it would be considered a U.S. seller, because it would be taxed as a U.S. partnership, assuming the LLC is a Florida or a U.S. LLC.
But that means that all my potential buyers, sellers from homes, has to be to open their own LLC. That's much more easier to sell home to avoid the 50%.
No, because if they're the only owner, then they don't avoid the 15%. Okay, if there's more than one owner, it's a partnership, there's no 15%. However, there are different rules within partnership taxation where there's withholding on foreign partners. So they don't get away with it, okay? And the other, one real quick thing, the other thing is, if you have a foreign single member or multi-member, doesn't really matter, there is a process where they could make an election to the IRS to say, I want to be taxed as a corporation, okay? And if they do that, and if that election is approved, then they're treated as a U.S. seller because it's a U.S. corporation that's a seller. It's not the, and they don't care who owns it, the status of the person who owns it. So that's why it's not an easy answer.
Next question, please. What about the 1031?
Okay, what about it?
What about that? If the gain will investing in new homes, for example, my seller sold a home with a big gain, and then he will buy a new one in the period of say 6 months, and then he has not to pay taxes for the gain.
Well, sort of. Does it qualify if it's somebody's personal home that they use personally? That it's
No.
not, that
No,
doesn't
it's
qualify for 1031 treatment. And I just want to make a comment about that. I'm not saying that foreign sellers can't qualify if they meet all the other criteria to do a 1031. They can. However, the withholding still applies until they have completed the 1031, because until they complete, who knows if they're really going to defer. And second, if you're talking to somebody who's from a country that they have to report that sale, like Canada, like the UK, they have to report that sale in their home country. So what good did it do for them to defer the tax in the US, but still have to pay the tax in their home country, and they lost the benefit of getting a tax credit? So we don't really advise it, because it's really not to their benefit, unless there are certain circumstances where it may be. Okay. Yes.
Could you repeat again the 50% personal use, how you described it previously?
Okay, so you look at the number of, you take the first 12-month period, and you look at the number of days that it's anticipated that the property will be occupied by anybody. That's your denominator. Then you look at as your numerator as how many days is the buyer, the owner, going to be using it for personal use. And if you take that fraction and it's 50% or more, then it qualifies.
Personal use is not when you're renting.
Personal use is not when you're renting it out. Yes.
So you buy it, you live up north, you buy a condo down here, you live in it for 3 months during the winter, and you rent it out for 2 months.
You qualify.
All right?
Yes, sir.
If you wouldn't mind holding your questions, we're just going to go on with our speakers, and then we're going to have Q&A following our speakers.
All right.
Thank you very much. Thank you, Renea. Okay. Our next presenter today is Gary Kauffman, attorney with Kauffman Law Office. And he graduated from Syracuse University and earned his JD, this one's working too, from the University of Pennsylvania Law School, where he served on the Law Review and published scholarly articles. Mr. Kauffman's primary focus is in real estate and business transactions, and he's a frequent lecturer, including symposia sponsored by RASM, the Realtor Association of Sarasota, Manatee. He brings a depth and breadth of legal expertise accumulated during his more than 33 years of practicing law. He began his legal career in New York City with the international firm of Proskauer, Rose, Getz, and Mendelssohn. In New York, he represented large corporate clients such as the Tokyo Stock Exchange and Bozell Advertising. His practice encompasses both residential and commercial real estate, as mentioned, and he's played an integral role in many major developments throughout the country and projects in Sarasota. Please help me welcome Gary Kauffman.
Thank you. That was a nice bio. I'd like to meet that guy. It's a pleasure to be invited to speak here at RASM. I was actually told that it's pronounced RASM, which is an interesting transition to what it's like to represent foreigners, because there are language differences, there are cultural differences, there are geographical differences, and we as real estate transactional attorneys have to deal with all of them. When I started my career, I started at a big corporate firm, which as you're saying, Proskauer Rose, Getz and Mendelsohn, and I then transitioned. I was actually an entertainment lawyer in New York City. But the reason why I even bring that up is because we did a lot of treaty co-productions where we had financing from France and Norway and productions in Vietnam. And dealing with international players is second nature to me. And I've been blessed to be able to work with Pat Tan, if anybody knows her. We do a lot of her closings. And there are just a lot of very practical, logistical issues that you have to deal with foreigners that are a little bit more severe than dealing with domestic buyers. So one of the key things is the legal formalities. We in the state of Florida, as you know, have significant formalities. I actually remembered when I lived in New York City that I had to sign stuff, and it would always come in a FedEx package, and I had a little tiny office, and I'd have to scramble around to find people to be 2 witnesses and a notary, and get it back overnight. Well, that's me. I'm a lawyer. I'm in the country. We have access to FedEx. I know what I'm doing, and I can get it done quickly. When you're in another country, the big thing I would say is lead time. The people have to be, don't expect, every deed, every mortgage must be notarized, must have 2 witnesses. And we as closing agents, when we're acting as a closing agent, we're basically a title agent for a big title company. Yes, there is e-recording now, and we, from our office, can take the deed and the mortgage and can send it off to the recording office really fast. But legally, we're supposed to be holding the original. So if we don't have the original, we should not be recording it. So we expect all of our sellers and our borrowers to be signing notarized documents and getting them to us in time for closing, so we have the physical thing to be able to e-record. So when we think about notarization, notarization in this country is pretty standardly known, but when you use the word notary in a European country, it means something different than what we mean here in the US. A notary public is what we're looking for. I don't know if anybody's heard the term apostille. That's not what will qualify it. And we get held up when we submit one of these documents to the recording office and that has the wrong information. They won't record it. They don't record it, we don't get a title policy, and nothing happens. A apostille doesn't work, a notary doesn't work. What does work is a US notary public. What does work is going to the embassy, the US embassy in a foreign country. Very coincidentally, literally right before the pandemic, almost as if the state of Florida was thinking, I know something's coming, let's do something fast, they came up with something called remote online notarization. And remote online notarization is a system that allows us to legally notarize your document with a notary here in the United States, here in Florida, here in Pennsylvania or Ohio, and have you sign it abroad. So it sounds like a great idea, isn't it? And it is a great idea, except for one thing. It requires a lot of technological things to be in place. It requires the notary to be able to verify the person's identity, even if the notary is based in Ohio. It requires the notary to be able to see the person signing. And if they can't see the person signing because they aren't set up with cameras and they're elderly, and I don't understand that technology. So all I'm saying is planning in advance is the best mantra that I can say for your clients. You talk to I've got 2 very capable closing paralegals. They're sitting at the back. They're experts at handling these logistical things. And if you have these kinds of issues, discuss it with them, and they will set up, whether it's online notarization or FedEx or UPS, they'll make sure that this gets done as long as we have enough lead time to get it done before the closing. May I have the next slide? I'm just kidding. They handed this to me a few minutes ago and said, your slideshow is ready. I don't know how to work the darn thing.
Do you want me to press for you? Do you
All right, well, let's press ahead and see if we can get to some examples. That's me.
This one?
Keep going, keep going, keep going, keep going. Yeah, stop to know the back one. Right there, okay.
I'm fired.
So on the left-hand side is an example of what a notarization would look like if you go to a U.S. embassy. On the right-hand side is the wax seal with the grommets. Who here knows what a grommet is? Okay, you get to clap the erasers after class. Grommets are those little metal things that you have in your shoes to make it easier for your shoes to come in, and that document has grommets in it. How are we going to scan a document to be able to e-record it if it has grommets in it? And a big wax seal. I'm just showing you an example of some of the things that we get that we, it's very nice and it's frankly frustrating for them more than us because they've taken time out of their day, they've found a guy and it still doesn't work to record it. May I have the next slide? Okay.
And I'd like to introduce Eva Slavtcheva to you from Money Corp. She's a business development manager. So if you're a real estate professional in Florida, the chances are you've worked with or will soon work with a foreign national client. So understanding the international money transfer process is crucial to a successful and timely closing. The Money Corp team specializes in currency exchange and international payments, and they can help your customers save thousands in comparison to using a traditional bank. Eva moved here from Bulgaria and moved to the US in 2004. She joined the Money Corp team in 2014, and she's been instrumental in the company's expansion throughout the US. So please help me welcome Eva Slavtcheva.
Thank you so much. Pleasure to be here. Oh, it's all set too. Thank you. So is everybody sitting on this side of the room because the wine is over there? Is that what's going on? Okay, I'm the only thing between you, between this and wine. So this is going to be easy, breezy, and quick, I promise. Unless somebody's already having wine. Hi, we're friends. So it's really important, I think, to talk about this. Currency exchange, I think, often gets forgotten, right? We line up the attorney, we line up the tax person, we line up the loan person, we find the home. But then the money has to get here, right? It's an important aspect of it, and I think it really, really should be treated as a big, important part of the puzzle. Exchange rates are ticking and moving all the time. If one of your clients called at the beginning of this conference to get a quote, and then they call at the end of this conference to get a quote, it would likely be different. Now imagine days, weeks, months. How long does it take one of your international buyers to actually purchase a home? From the time they get the idea, honey, we're going to get a villa in Florida, to the time they actually close. What do you guys think? 6 months.
A year.
COVID time, I mean, who knows, 2 years, it's been a while. So there's a lot of pent-up demand. A lot of people want to come here and buy, but the exchange rate is doing its thing, and unless they're paying attention to it, it could burn them last minute. So really important to be aware of this. How many of you have heard of Money Corp or have worked with us? Hello, friends. Well, I can go. You guys know already what we do, some of you. Thank you for being Money Corp partners. Money Corp is a company that specializes in currency exchange and international payments. It's all we do, all day, every day, no loans, no cash travel money. It's strictly international money transfers. We can help your international buyers bring money here, but we can help your foreign national sellers repatriate the proceeds in dollars and bring them back to home countries. We're one of the largest currency exchange companies out there. We can help exchange about 120 different currencies. It's not all of them, but it's a lot of them, so hopefully we can help your next foreign national client. We do have teams in 10 different countries. I myself am based in the Orlando, Florida office, so just about a 2-hour drive away. But we do have teams in Canada, Europe as well, quite a few different countries. One of the things that I always get asked about security. It's important, it's a very, very big thing. How is Money Corp secure? You're not a bank, how do we trust you? Why should clients trust you? It's a fair question, it's an important question that everybody should ask. So one, Money Corp has been around for a very, very long time. We didn't spring up yesterday. We've been around since 1979. If we had ever lost money or been involved in something bad, I probably wouldn't be here speaking to you. The other really important thing to point is that Money Corp Group is the only non-US entity that has an account with the US Federal Reserve. That is only a privilege that's reserved for US banks. That, I think, speaks volumes about the level of security and compliance, the level of auditing that we went through in order to achieve that. It's a huge, huge thing for a currency exchange company to achieve, and I think we're vetted more than like a regular bank would be because we're not a bank. So I think that is huge, and I think that should make you feel very comfortable with relaying that information to your clients. Oh, and can somebody give me a 5-minute shout when it's 5 minutes to one so that I don't keep talking? Maybe that. Somebody shout to me so I don't keep going. So currency exchange market, we've definitely not had a shortage of world events, right, in the past 2 to 3 years. Loads has happened. I don't need to, list them all. COVID being a big one had a huge, huge impact on the currency exchange market. There's events happening, I think every month something's going on in the world, unfortunately. All those things, big and small, have an impact on the exchange rates. Sometimes, before the event even happens, it's the feeling towards the event that causes the exchange rate, with the investor sentiment. And if the exchange rate swings one way or another, that's affecting your buyer's decisions, your buyer's power. So it is important to keep an eye out on the market and keep an eye on, is the dollar up, is the dollar down, what's going on? It can help you spring up, start better conversations with your clients, or help you to know when to check in with a specific client. The most recent one, the big conflict war between Ukraine and Russia, what did that do? It made the dollar go up. What does a US dollar mean for your international buyers? More expensive. That Florida home just got more expensive. They were already expensive to begin with, so now they're more expensive. So events like that have an impact, and again, impact your client's decisions. A few tools that you can use. We have daily exchange rate emails. They're free. I can sign you up for them if you're not signed up already. I think it's a really easy tool for you to glance at in the morning, delete it some other days, but it's nice to see and keep your eye on it because your clients, your foreign national clients, are not thinking in dollars. They're thinking in euros and pounds and Canadian dollars, whatever their home currency is. So if anybody wants that, I can sign you up for it. Our Money Corp website every single day has a daily exchange rate update, a weekly market update. It's written very simple, easy to understand. You can even snip it and forward it to a client if you think it'll help you, again, start up a conversation. Very, very easy to understand. 2021 profile of international activity. They do a Florida one and a NAR also does one. Look through them. They're packed with information. A lot of really, I thought it was on there. A lot of really, really good information. Canada is still the #1 buyer here. In Orlando, where I'm based, a lot of Brazilian buyers. This changes, obviously, every few months, every year, but keep your eye out on that report. One of the things that stood out for me in the most recent one was top reasons clients didn't purchase. Cost of property, well, you know that one. Could not find the property, and exchange rate. And in my mind, exchange rate and cost of property really go together. So look through this. It's got like 20, 30 pages of information, but I think it's really, really good. Big difference between bank and currency exchange company. This is the question I get asked all the time. But Eva, my clients use the bank, they bought their property, everything went fine. Why do we need Money Corp? It's true, the bank can do it. Banks do currency exchange, they do international transfers. They're most people's go-to. They have their money, I go to the bank, I transfer my money. Why not? It's fine, you can do it, but they will charge you a lot for it because it's not their main point of business. It's an extra service that they offer, so they're going to charge you more for it. U.S. banks, they're great for many other reasons. I have a U.S. bank, I use it every day, but when it comes to currency exchange, U.S. banks are a total ripoff. I'm sorry, they are. Compared to other banks, Canadian banks are very fair, I think. European banks, not so good, again, but just have your clients compare. Have them compare. We don't hide anything from a client. When we get a client that's interested in using Money Corp, we say, call your bank and get a quote, call me back and get a quote. We want you to be educated because if that one client is educated, that they're going to tell their friends, their family members, everyone else they know, and then the information spreads. The exchange rate will be far better using the currency exchange company, and also the international wire fee will be avoided. Those are the two charges your clients usually face. There's a big misconception a lot of the time when the clients think that the international wire fee of $50 or $60 is the actual cost of sending $200,000. It's not. That's just a fee to move the funds from point A to point B, but the margin on the exchange rate is where the bank will make a lot of its money. With Money Corp, they will get a dedicated currency dealer who's actually really hand-holding your client from start to finish, explaining the process, giving them information on how the market's moving, suggesting different ways they can book exchange rates. Our team is also gonna, I was thinking about this when Gary was speaking, push them to send their funds on time for closing day, because they don't, and sometimes Europeans, I'm one of them, are not so good with deadlines. And Brazilians too, I love you, but you know, it's true. We are not so good with deadlines, so we need that little push. Did you send the money? Did you sign the documents? Did you do the things? Closing is tomorrow. They need that push, so we do that for them when we need to. A few different ways that you can book, your clients can book exchange rates with Money Corp. At a bank, what do? You walk in, you get the exchange rate of the day, you send your money, you go home. It's very straightforward. With Money Corp, they can actually start the process sooner, 6 months ahead. Is that my 5?
Yeah.
6 months ahead, 10 months ahead if they want to. We can do a spot contract where we lock in the exchange rate right then and there on the phone. We can monitor an exchange rate for them, help them target a favorable movement in the chart, or we can lock into a rate of exchange for anywhere up to 2 years. Opening an account is free, it's simple, it's an address verification. A lot of the time we don't need documents. If the address cannot be verified for some reason, then we ask for proof of ID and proof of address. It's a very, very simple account opening process. They don't need to keep funds on account with us. There's no obligation to use us. A quick example I always like to show, just to show you the process from start to finish. We'll take Camille, she lives in France, she's buying a property in Florida for $300,000 US dollars. She looks at the exchange rate between the euro and the US dollar, it's 108. She heads over to her local bank in France, and she quickly finds out she's not going to get an exchange rate of 108. She's likely going to get an exchange rate of 1.04. If she opens a quick account with Money Corp, she can quickly get a comparison, get a quote, see how much money she's saving. That's a pretty sweet amount, 8,000 euro. That's closing costs. In addition, Camille is not going to pay an international wire fee because Money Corp has a local account in France. So she's just going to move her funds from her bank in France to Money Corp in France. We convert euros to dollars, and we send directly to title. When we send funds to title, the correct amount will arrive, not $25 short or $40 short when somebody along the way took a cut as a transfer fee or an intermediary bank. It's going to be the correct amount. And along the way, there's going to be a transfer confirmation, a trade confirmation, all those things that make title happy, realtors happy, make the client happy, because they can show a very clear flow of funds. We're going to have to rush through a few of these slides, you guys. I will email this to all of you. This is just a quick show to how much currency exchange fluctuates. If Camille had bought a little sooner, I think she could have saved a nice chunk of money. If she bought back in November, she's looking at 258,000 euros. If she bought back in June, I can't see, 245. So waiting doesn't always pay off. It didn't for her. With Money Corp, clients like Camille can actually book exchange rates or book US dollars in her example earlier. She may not know how much dollars she needs for closing, but if she sees the exchange rate is favorable for her in the summer, she can exchange 50,000, she can do 100,000, keep it on account with us, keep looking for a home. When she finds one, we can send funds to title. There's no reason to wait 3 days before closing to exchange the funds. They can do it, we do it all the time, but the longer we can watch the market, the more opportunities for, the euro dollar to be more favorable. So don't wait till last minute. This is my last slide, and I will stop here so we can drink wine. Sellers. This has been huge. I've been doing probably 1 or 2 foreign national sellers a day, I feel like, since COVID started. It hasn't stopped. A lot of them are Europeans, Brits, Canadians as well. Everybody has been selling. Why? Because COVID made the dollar go up, and now they're making so much money when exchanging their dollars back to their home currencies. When they sell, they have a few options. Title company can send to their local bank account in the US. Sure, no problem there. But how will David from UK in this example, how will David get his money when it's in his US bank account? He has to be here. He has to be here at the bank. He can't just go online to Bank of America, plug in 400,000 and press send. It's not going to let him do it. So he has to be here. During COVID, nobody was here, right? No. So this is super important. If you remember anything today from my presentation, please remember US Patriot Act, And maybe remember my phone number too, because if it happens to your client, then you'll need to call me to get the money unstuck. But this happens, and unfortunately it has happened quite a lot. The title company can also send the funds to David's UK bank account. Some title companies refuse to do international wires, which again blows my mind, but some title companies do. Now, title company doesn't mind where they send the money, and they're not gonna profit from this one way or another. They're just gonna do what the seller tells them to do. But if David tells title company for his proceeds to be wired to his bank in England, what exchange rate is he gonna get? No one's gonna stop and write it down for him and explain what margin the US bank title company banks with is gonna take. It's not the title company's fault, it's not anybody's fault, but it's just what's gonna happen. He's just gonna end up with British pounds, a lot less than he should have in his bank account, and then he's not gonna be very happy. We can, with Money Corp, before closing day, and underline before closing 4 times, before closing day, we can set up a Money Corp account, send US dollar account details to title, have title company directly transfer proceeds to David's Money Corp account. And now David's completely in charge of his money. US Patriot Act doesn't apply to us. We're not a US bank. David can initiate an exchange and transfer with his funds that are on account with Money Corp from anywhere in the world. He can hold the funds on account and exchange them next year if he wants to. A lot of sellers do that. Why should he exchange his funds on closing day just because the closing day was scheduled for that day? Exchange rate may not work out for him, so why should he be pressured to do so? So this is really, really important, and I think if you relay this information to your sellers, you'll be a real star, rather than waiting for them to get their money stuck, call you, and then you'll be like, well, I know someone that can fix it. I think you can be a much better global real estate star if you fix it before, if you see the problem before it ever happens. I will stop here. If anyone has any questions, I'll be right there by the line. I want to thank you all for being here.
Thank you very much, Eva. That was very, very informative, and also thanks to Renee and Gary. And we welcome your questions now. I have another microphone here, and then I'll pass to you.
Let's say I'm David's brother, and I did a transaction in the States, and you're holding my funds for a year and a half. What's the rate of dividend increase on my funds that you're holding that I'm going to receive along with those monies when they come to me?
When they're on account. Oh, sorry. Should I use this one?
Sure.
Okay, whatever's easiest.
Yeah. There you go.
Thank you.
You guys hear me?
Yeah.
So when funds are held on account with Money Corp, it's a zero. We're not a bank. You're not earning any interest on the funds that are held in that account. And we let the clients aware of this. Not that you're going to earn very much if it's sitting in a U.S. bank, to be honest. The whole reason that clients choose to do this is so they can take advantage of a better exchange rate. He's actually going to make a lot more savings or a lot more profit, whichever way you want to look at it, if he gets a more favorable exchange rate rather than any amount of dividend that a bank could give him in a year. I mean, one small movement in the exchange rate could mean $1,000 difference, a few $100 difference, a few $1,000 difference, depending on the amount. So the more money, essentially, the more the savings. So it's never, that's not really the reason as far as, is he going to earn something on account with us? No, he's not going to earn anything. He's just waiting for a better exchange rate. Yeah.
I'd like to follow that up just with a question. All right. Hi. Just a quick question. So in that instance, so you have a person that's assigned to each person. So basically, as an example, so you have a UK, a pound, dollar specialist that is going to basically let this person know, hey, whoa, we just did that. You said you wanted to maybe cash in at this number, and then they would call. Is that how it works?
Yes, that's one of the ways. A client can say to us, Money Corp, ideally, I want to exchange when the rate is 1.30. When 1.30 hits, call me and email me, and I'll decide if I want to go ahead. We can do that. There's an instant rate alert email that goes out to the clients, and the currency alert will ring just to say, if you have any questions, you want to go ahead. There's a more automated version of this, where the client says, Money Corp, if 1.30 hits, don't call me, just book it in for me right away. Even if that rate is available for 2 minutes, sometimes it is, it's a live market. Our system will automatically secure it for him. He'll have to pre-agree on the amount, of course, how much he wants to purchase, how much currency he wants to exchange. It happens instantly, and then he'll just get an email confirmation. And a lot of our sellers actually choose exactly that option. They put their proceeds in the account, they say, don't call me, don't bother me. When the rate hits this, just do it. I'm going on holiday. And that's usually what they do.
have saved had I known about Money Corp. And I'm so happy that I've got you as a resource, and thank you to all the panelists who are gonna all be amazing when I have Canadian clients. But this Money Corp opportunity, I can tell anyone here firsthand who hasn't suffered, it's amazing. That's so enlightening. Thank you.
Thank you, I appreciate you saying this. Unfortunately, some of my best to this day referring partners are the ones that learned the hard way, that got burned or had a client, lose a deal or something really bad happen, and then they become like a dedicated partner of ours. But don't wait until, something goes wrong, just do it now.
Only one question. Do you make also loans for European clients?
Did you say
Loans?
Loans, yeah. for
No, we don't do any loans, no loans. We strictly move funds from one country to another. If your client is getting financing or getting a loan, they may still need to transfer a deposit. We can do that. We can do small amounts as well as sky's the limit, but no, we don't offer loans ourselves.
Thank you.
Yeah.
In which countries in Latin America do you have service?
I wish there were more. We'd love to work with more Latin America. The truth is a lot of the countries and the currency there are restricted. We can work with Brazil. The whole reason we can work with Brazil is because we took 8 years to actually become a bank there, to get a bank license there. In order for us to do business in Venezuela and Argentina and a lot of other countries, Colombia, we have to follow the same thing. It's an incredible amount of money, time. Essentially, a bank in Colombia, if a client is using Money Corp, then the bank in Colombia is losing profit, right? They can't charge the client what they want to charge the client. Why should we let a third party like Money Corp come in and help our clients when we could be charging, more? So a lot of it is we're blocked by a lot of the countries. They don't want us working there. So unfortunately, Mexico at this time and Brazil, we can help. We can send money to any country in South America, meaning if you have a U.S. resident here that has U.S. dollars that wants to send money back to, let's say, family or friends in Argentina or Colombia, no problem. But money coming from there, coming here, no can do, for now.
Thank you.
Yeah.
How long does it take to set up an account with Money Corp?
It should take 5 minutes. 5 minutes, it's a very simple online registration. It can be done over the phone or online. Name, date of birth, address. If the address is not verified, it says upload proof of ID and proof of address. Simple, utility bill, driver's license, take a picture with your phone, press send, and you're done. It's a very, very simple online process. We can also do it over the phone. Sometimes we have elderly clients that say, nope, no computers for me, and that's okay. We have other ways to do it if needed.
Okay, I have one question for Renea, real quick. If a sale is over $1 million, is it automatically 15% no exception?
Yes.
Okay, because we didn't cover that, so, okay, thank you.
Would you pass it to Ms. Thomas?
Renee, can you address before national passes away?
Oh, that's a whole nother topic. And actually, it's one of my favorites, but I'll give you just a really, really brief synopsis. For U.S. people, for people who live here, the current estate tax exemption is $12,060,000. So there's not very many U.S. people filing estate tax returns because their estates just aren't that large. From the very beginning of whenever it came into effect, the exemption for non-residents is $60,000. Now, does anybody have any property that's worth less than $60,000? And it's the value of the property at the date of death. Okay. So there is a U.S. estate tax filing for any non-resident who dies owning, I'll say U.S. real estate. There are other U.S. assets that would be included, but the one we see mostly is U.S. real estate. If the value of that real estate exceeds $60,000 at date of death, a filing is due. Okay. Now, it doesn't necessarily mean that estate tax is due. We, the U.S., have estate tax treaties with 14 countries. Okay. We have income tax treaties with many, many more countries than that, but it's 14 for estate tax purposes. And if you're from one of those countries, countries where you have a treaty. A lot of them have very favorable provisions, and so, for instance, if you're Canadian and you're married and your spouse is either on title of the property or inheriting the property, the worldwide estate could exceed 24 million and still have no tax due. So it's all very, very basic circumstances, but the thing is, if you're taking a listing or you're working with someone and there's a deceased person on title, you need to do something right away. So here's the issue. Here's another one of the issues. The estate tax return is due within 9 months after date of death. So if it's after that, which the ones we get referred to probably are because the survivor is selling and the death took place years ago. Nobody ever told them that there was anything that needed to be filed. And if you think the FERPTA processing is a long process, I have estate tax returns that were filed over 3 years ago that are sitting. And if it's in connection with a closing, and there's a deceased person on title and that estate tax return hasn't been filed or been approved by the IRS, this could be with question for Gary, many times the entire proceeds are held in escrow. So I'll let Gary. It's a mess. It's a real mess. Sorry.
So what do you suggest the heirs do? Maybe if an owner knows he's sick and he's going to be passing, can he quit claim to somebody else, his family? What do you suggest they do?
Can he or should he? Okay. Of course, anybody can quit claim, but if they quit claim, now they've made a gift. Okay, so it's subject to gift tax. And if you're from one of those countries that has a very favorable treaty, and you're not going to owe any estate tax, then why would you pay gift tax?
Is that a lot higher? Is the gift tax a lot higher?
Yeah, because the exemption's like 16,000, unless it's to a spouse. But I mean, there's different exemptions. But the countries we deal with, European countries, Canada, those provisions are so favorable that very rarely do we have somebody that actually owes tax. So but the thing about it is, if you can, sell it. Because if you don't own it at the time you die, then there's no fund.
All right.
Really? Listen, some people don't know.
I have a question for Gary, please. So that remote online authorization, is it somewhere fixed in writing? Does everybody know about it? Because last year I had a foreign seller and the title company wouldn't accept it. U.S. embassies were closed because of COVID, so they had to fly from Europe to the U.S. for 3 days to sign the papers and then go back. Even though I heard about this remote authorization, but the title company was adamant, no, they wouldn't accept that. Is it somewhere in writing where I can see it, next time just give it to the title company here? It is legal.
Where you say it's in writing, which piece are you talking about?
That it is actually legal and it should be accepted, that the title company needs.
When you say it is legal, what's the it?
The remote online authorization, where can I see it in writing?
Oh,
Is it like a decree, a decision, a regulation,
Is
a
it more of an
law,
option?
something, yeah?
Some title companies may choose not to, use
That
it.
title company either didn't know.
okay,
or